Welcome to the podcast, ES Midweek Update, your Wednesday appointment for cyclical and volume analysis on ES, the S&P 500 mini futures contract. I am Ryan Cooper, a financial journalist, and we are joined by expert analyst and trader Clara Bennett from Cyclical. Please note that the views presented in this podcast are generated by AI NotebookLM, that analyses and reprocesses are pre-market live sessions from the YouTube channel Cyclical, and therefore could contain errors. All references to price levels or market analysis are not to be considered financial advice. The aim of this podcast is to analyze market dynamics and provide a midweek update.
All right, everyone, get ready for a deep dive. We're going head first into ES trading. You know, those S&P 500 mini futures that everyone's watching. And to help us navigate this, we have Clara Bennett, all the way from Cyclical. She's an absolute pro when it comes to cyclical analysis. Clara, welcome to the show.
Thanks for having me. Glad to be here.
So it's Wednesday, February 19th, 2025, and the FOMC minutes are coming out later today. The market's definitely feeling the energy, but we're going to take a step back and look at the pre-market sessions. You know, those quieter moments from Saturday through Tuesday before the main event.
Yeah, for sure. Those pre-market moves can tell us a lot, little hints about where ES might be headed.
Okay, let's break it down. You've been studying these sessions, Clara. What's the overall feeling? What are these early signals telling us?
Well, with that strong close we saw on Friday and the way the pre-market was looking initially, there was definitely a lot of excitement. Almost felt like we were going to have this big, explosive start to the week. But then the market actually opened and things shifted pretty quickly. It was more like a fizzle than fireworks, you know? We ended up right back in last week's range.
So not quite the rocket launch some people were hoping for. I'm guessing those holiday closures and the lower volume played a part in this.
Definitely a factor. There weren't as many trading opportunities during those pre-market sessions. Plus, we're also near all-time highs, which always makes things a bit uncertain. Uncharted territory, right? We don't have those clear historical volume targets to guide us, so people get cautious even with those initial bullish signs.
Makes sense, like navigating without a map. Now, you're the expert in cyclical analysis, Clara. What jumps out at you when you look at ES through that lens?
Well, what's interesting is this potential 8-day cycle pattern forming. Earlier this week, we had a pretty clear price rejection at the 8-day trend line. That's a classic signal for a possible breakout, so I'm keeping my eye on it.
A potential breakout. Now, that gets me interested. What are the key levels we should be watching if things start to heat up?
There are a few important points lining up. First, we've got the 6110 level from last week, which has been a strong support zone. Then we've got the 8-day VAP, the volume at price. And wouldn't you know it, the 50% Fibonacci retracement of the 16-day cycle is also right around there. It's almost like they're all pointing towards a potential bullish move.
Okay, so we've got these support levels all converging around 6110. If we break above that, what are our targets? Could this really take off?
If we zoom out and look at the bigger picture, there's a group of double and triple tops from a while back. Those are now our potential targets if we do break out. We could see ES hit those psychological levels like 170, maybe even 175, if this breakout really gains traction.
Wow, 175, that's a big jump. But let's be real, Clara. We've got those FOMC minutes coming later. How much could that change things? What about this potential bullish scenario?
You're right. Those FOMC minutes are a wild card. They could really shake things up. It depends on how the market reads the news. A hawkish tone might trigger a pullback, but if the news is seen as dovish, supporting growth, then this bullish run could get some serious fuel.
Sounds like we're in for a ride. Depending on those minutes, traders need to be prepared for anything.
Absolutely. Patience is key right now. Let's see how the market reacts to the minutes before making any big moves. Let the market show its cards first.
Okay, good advice. We've talked about the general sentiment, the 8-day cycle, those FOMC minutes. Now, let's zoom in on those pre-market clues you mentioned. What were some of the standout details, those little hints that might be speaking to us?
One thing that stood out was the big jump in volume around 6/120 on Tuesday. It was like hitting the gas pedal suddenly. That kind of spike at a support level usually means there's strong buying pressure. Basically, it shut down a potential bearish move that was building.
Interesting. So this volume surge supports the bullish idea we're getting from the cyclical analysis.
Exactly. And there's something else too. The weighted point of control. the WPOC. They call it naked sometimes because it doesn't need any extra indicators. It's acting as a big support zone, like a double layer of defense against the bears.
So we've got the big picture view, those volume hints, and those key support levels all lining up. But what about quick intraday opportunities? Any setups in those pre-market hours that traders could jump on?
Actually, there was one. We saw a false break of a pin bar pattern. That's a classic reversal signal. This one probably triggered some stop losses, creating a potential buying opportunity right around the 6144, 6145 area.
Hold on, slow down a second. What exactly is a pin bar, and why would a false break mean it's time to buy? I think our listeners could use a little more explanation here.
Of course, a pin bar is a candlestick pattern. It often signals a potential reversal. It has this long wick or tail sticking out one way and a small body on the other end. So in this case, the market dipped below the pin bar's low for a moment, triggering those stop loss orders. But then it quickly bounced back up. That suggests the buyers are still in control and could push the price higher.
Got it. So the sellers who jumped on that initial break are stuck now, maybe even adding to the buying pressure. But we shouldn't just blindly buy at 614, 46145, right? What else should we be watching for?
You're right. We need more than just the pin bar. I'd want to see high volume with that move, something like 80–90% of the average. Also, I'd be checking the spread force index for positive divergence. It measures the strength of buying and selling pressure. Those extra signals would make me feel a lot more confident about the trade.
Makes sense. We need to be smart, especially with the market near all-time highs and those FOMC minutes coming out. Risk management is crucial, wouldn't you say?
Absolutely. It's a high-stakes game right now. Traders need to stay disciplined and patient. No need to chase every little move. Just focus on setups with clear entry and exit points, manage that risk, and you'll be ready to capitalize on whatever happens.
Great advice, Clara. This has been really insightful. But before we move on, I wanted to touch on something you mentioned earlier. Long liquidation. Could you explain that for our listeners? What is it and why should traders be aware of it, especially in the current market?
Sure. Long liquidation is basically when traders holding long positions, betting on the price to go up, start selling those positions.
And when does this usually happen? What triggers this sudden rush to get out?
Could be a few things. Maybe the price hit their target, or there's news suggesting the market might turn bearish. Sometimes it's just taking profits. It can also be driven by fear or uncertainty, especially at a critical point like now.
So how does this affect the ES market, especially when we're up near those all-time highs?
Well, when a lot of traders start selling, it can push the price down. And depending on how much selling there is, it could even cause a sharp drop. It's like the balance of power shifts and the sellers take control.
Like that dam-breaking image you used earlier, important to be aware of this, especially with the FOMC minutes adding to the uncertainty.
Exactly. It might not happen, but it's something to keep in mind. Always be prepared.
So if this long liquidation does happen, what signs should traders look for? What are the red flags telling us the dam's about to break?
I'd watch for a clear break below those key support levels, like that 6110 we talked about. That's a major line in the sand. Increased selling volume would be another sign, especially if volatility spikes. Keep an eye on momentum indicators too, like the RSI, for signs of weakening momentum.
So it's about connecting the dots. The cyclical analysis, the volume, the price action, those indicators, even the news. It's like solving a market mystery.
That's it. The more pieces you put together, the better you'll be able to navigate these uncertain times and make smart trading decisions.
Clara, this has been a fantastic deep dive into ES trading. Thanks so much for sharing your expertise with us.
My pleasure. Always happy to talk about the markets and help traders understand this stuff.
And for our listeners, stay tuned. We'll be right back after a quick word from our sponsor. We're back with the deep dive, folks. Still digging into the ES market with the amazing Clara Bennett from Cyclical. Clara, that dam-breaking analogy for long liquidation really paints a picture, especially with those FOMC minutes on the horizon. But let's switch gears for a minute and talk about the mental side of trading. You've been doing this for a while now. What are some of the common traps that traders fall into, especially in a market as fast-paced as ES?
Oh, there's so many ways we can sabotage ourselves, even with the best plans. I think one of the biggest is FOMO, that fear of missing out. You see ES surging, and suddenly your logic goes out the window. You jump in without thinking, chasing the move, and often buying right at the top.
It's like when everyone's raving about a hot stock, and you feel this pressure to buy it before even knowing what the company does.
Exactly. And of course, there's the opposite problem. The fear of loss. That one can really paralyze you, making you hold on to losing positions way too long, hoping they'll come back. You get attached to those trades even when the market's telling you to cut your losses.
The hope trade. We've all been there, clinging to that sinking ship, convinced it'll turn into a yacht. So how do we avoid these traps, these emotional landmines? What are some ways to stay grounded and make those rational decisions, even when the market's all over the place?
It all starts with awareness, really. You need to recognize your own biases, those things that trigger your emotions and mess with your judgment. Once you know your weaknesses, you can start building defenses. Journaling has helped me a lot. I keep a detailed log of all my trades, not just the entries and exits, but also what I was thinking, how I was feeling, those times when fear or greed was creeping in. Helps me see those patterns, those mental traps I keep falling into.
Like holding up a mirror to your trading mind, seeing those blind spots you might miss otherwise.
Exactly. Another thing I do is mindfulness. Taking a few minutes every day to just breathe, quiet my mind, and disconnect from all that market noise. Helps me center myself and approach trading with a calmer, more focused mind, like hitting the reset button on my emotions so I can see the market more clearly.
That makes a lot of sense. It's like in sports, those moments when the pressure's on. You have to calm your nerves, silence that inner critic, and execute your plan. Journaling, mindfulness, knowing your biases, all great tools for building that mental toughness. Now, Clara, you mentioned having a specific approach to trading, a strategy you've developed. Could you share a bit more about that with our listeners? What are the core principles that guide your decisions?
Well, my approach is really built around cyclical analysis. That's my thing. But it's not just about finding those patterns. It's about understanding what drives them, those fundamental forces pushing and pulling the market, connecting those cyclical patterns to the bigger picture, like the economy, global events, even how the crowd's feeling.
So you're not just reading the chart, you're reading the story behind it, understanding the narrative that's unfolding.
That's it. And that story is always changing. So I combine my cyclical analysis with price action, volume analysis, and market sentiment. It's about using all those perspectives to get a complete view of the market.
A multifaceted approach. You're not just relying on one trick. You're integrating different tools, different frameworks for a more comprehensive view. But let's get specific. You mentioned price action. What are some key patterns or signals you look for when trading ES?
One of my favorites is the classic head and shoulders pattern. It usually signals a shift from bullish to bearish sentiment. Like the market's giving you a warning sign saying, hey, this party might be ending soon. I also keep an eye out for the double bottom. It often forms after a downtrend and could mean a reversal to the upside is coming, like the market's testing those lows, checking if there's enough buying power for a comeback.
So you're looking for these patterns, these footprints that reveal what the big players are doing, the ones who are really moving the market. But it's not just the patterns themselves, right? It's the context, the surrounding action, and those confirmation signals that give you more confidence in the trade.
Exactly. Context is everything. A head and shoulders pattern near a major resistance level means a lot more than one out in the middle of nowhere. I always check for confirmation from volume, momentum indicators, and other technicals, building a solid case before making a move.
Like a detective, gathering clues to crack the case. Now, you mentioned volume as a key confirmation. How do you use volume analysis in your ES strategy? What are you looking for in those volume bars?
Volume tells you how much power is behind those price moves. Is it real conviction or just some noise? I look for surges in volume to confirm breakouts, up or down. I also watch volume patterns at those key support and resistance levels. For example, if volume drops at a resistance level, it could mean the sellers are getting weaker, maybe setting up for an upside breakout.
So volume is like the fuel gauge, showing you how much force is driving those price moves. And you're using it to gauge the strength of those support and resistance levels too. It's amazing how these simple concepts, when you put them together and analyze them carefully, can reveal so much about how the market works.
It really is. That's what I love about trading. It's a constant puzzle, trying to decode the market's language and anticipate its next move. And the more tools we have, the better we can solve that puzzle.
We're back with the deep dive, folks. Still exploring the ES market with the one and only Clara Bennett from Cycle Depth. Before we went to break, Clara, we were starting to uncover those pre-market clues. Those little whispers that hint at what the market might do. Let's keep going with that. What other interesting things did you notice during those pre-market sessions?
Well, one thing that really stood out was how the ES was interacting with its volume profile, almost like it was dancing around those key volume nodes, testing them before making a real move.
Wait, could you explain that a bit for our listeners who might not know about volume profiles? What are they and why do they matter so much?
Sure, a volume profile basically shows you where most of the trading happened at different price levels. It's like a map, highlighting those areas where buyers and sellers were really battling it out.
So like a heat map of the market's action showing you the hottest spots.
Exactly. And those high volume areas often act like magnets for the price. They can become strong support or resistance zones.
Okay, so back to those pre-market sessions. You said the ES was interacting with its volume profile in a specific way. What was happening?
There was this pattern. The ES would approach a high volume node, pause there for a bit, almost like it was checking the strength of that level. Then it would either bounce off or break through, but with real conviction, like it was figuring out who was stronger, buyers or sellers, before committing to a direction.
Sounds like the ES was playing a strategic game, carefully planning its next move.
Exactly. And those pre-market moves, they often gave us a hint of how the ES might act during the regular trading session. It's like getting a sneak peek of the game plan.
That's pretty cool. So by watching how ES interacts with its volume profile in those pre-market hours, traders could get a jump on those breakouts or reversals.
Yeah, exactly. It's all about spotting those little clues, those early warnings the market sends out.
Now, you've talked about cyclical analysis, volume profiles, those price action patterns.
Yeah.
You clearly use a lot of tools to trade the ES, but there's one we haven't touched on yet. The depth of market, the DOM. Could you explain what that is and how you use it for your ES trading?
Of course. The DOM is basically a live look at the order book. It shows you all the buy and sell orders waiting at different prices. It's like looking under the hood of the market and seeing how supply and demand are working in real time.
So it's not just about the price right now, but about what's driving that price.
Yeah.
How do you make sense of all those DOM signals, all those orders flashing by?
It's about understanding the order flow, those patterns and imbalances that pop up. Like if you see a big buy order sitting at a key support level, that gives you more confidence that the level will hold. Or if there's a wall of sell orders near a resistance level, that might mean a breakout is about to happen.
So you're not just watching from the sidelines, you're right there on the field, seeing how things play out in real time.
Exactly. The DOM gives you a feel for the market's pulse, that back and forth of orders that's constantly shaping the price.
Clara, this has been an incredible deep dive into the world of ES trading. You've shared so much knowledge, from those big picture cycles to those tiny pre-market clues. As we wrap up, what's the one thing you want our listeners to take away from this? What's that one golden trading nugget they can hold on to as they navigate the ES market?
I think the most important thing is to remember that trading isn't just about rules and indicators. It's about truly understanding the market, its rhythms, its patterns, its psychology. You have to be a detective, a student, always learning, adapting, searching for that edge.
Well said, Clara. Thanks so much for sharing your insights with us today. It's been a privilege having you on the deep dive.
The pleasure was all mine. Thanks for having me.
And to all our listeners out there, keep on exploring, keep digging deeper, keep pushing those boundaries of your trading knowledge. Until next time, happy trading.
Thank you for listening to the podcast ES Midweek Update. Subscribe to the Cycle Depth channel to stay tuned for the next episodes and leave a comment. We remind you that the opinions expressed in this podcast are generated autonomously by AI NotebookLM, based on our pre-market live sessions of the U.S. market, and therefore, the content might not fully reflect objective market data or the analyses from our live sessions. This podcast is not financial advice. A greeting from your host, Ryan Cooper, and we'll see you next Wednesday.